The CEO of Shell, Wael Sawan, is joining us now for their Capital Markets Day all day here in New York City. Wael, really appreciate you joining us this early, popping in on Squawk Box like this. Thank you very much. Increasing cash flow distribution to shareholders up from 30 to 40% to 40 to 50%. Why are you doing that? Is that a recognition that you feel like as an energy and oil and gas company, in particular in Europe, you need to do a little something more for shareholders?
It starts with conviction of where we are in our investment narrative. So if you go back 2 years ago, we were at 20 to 30% distributions of CFFO, 30 to 40% for the last 18 months or so, and indeed now 40 to 50%. We had a set of financial targets, all of which we have either delivered or out-delivered on. And what we are finding is that we have built real momentum. And so today we also announced a $5 to $7 billion cost reduction between 2022 and 2028. We have continued to tighten our capital and become just much more disciplined. And we're unlocking more opportunities through growth, in particular in integrated gas.
Where are those cost cuts, the $5 to $7 billion? Where's that coming from?
All across the place. So we have simplified the organization. We have made some portfolio choices, sold certain assets. Recently, we announced the sale of our onshore Nigeria, for example. This week or by next week, we expect to sell our Singapore chemicals and refinery. A lot of that is coming from there, and we're changing the way we work. So procurement is changing, the use of AI in our day-to-day activities, all of it is allowing us to become much leaner and fitter.
Will you, and you mentioned this in your Capital Markets Day release this morning, will you sell off, or would you like to sell off your entire chemicals business?
We are looking region by region at different options, because it depends on what region you're in. The majority of our capital sits in the U.S. From a chemicals perspective. And we're looking at building scale and potentially working with others to be able to really unlock the full potential of those assets. In Europe, it's a slightly different story.
You would sell it if a buyer came along?
We are open to looking at all options, right? The market right now, the macro is not conducive for a sale, and so unlikely that we will be able to find a price that's going to be attractive, but our focus is on value creation.
Do you feel like, and I think you've referenced this before, do you feel like your stock, which is, by the way, doing better than Exxon, as good as Chevron, way better than BP, do you feel like your stock is still undervalued because you're headquartered in Europe, where, let's be perfectly honest, oil and gas companies, energy companies, but particularly oil and gas companies, do not seem to receive investor respect? Why not change that listing from Europe, I don't know, to right here at the New York Stock Exchange? Just happen to be looking around.
Let me start by recognizing that the value of our share price is what the value of our share price is. It's what our investors are attributing to that share price. All we can control is making sure we make the best version of Shell available, and if we fundamentally believe we are undervalued or that our cash flows don't currently represent the valuation of the company, we play the arbitrage game. And that's why we have been preferentially leaning towards buybacks. I am very happy to keep buying back our shares, as we have done just over the last 2-3 years. We bought back over 20%. At this rate, we can buy back another 40% of our shares between now and 2030. I want this to be the biggest capital reallocation in Shell's history to be able to unlock value. And that is the way that we can deliver long-term shareholder returns.
Joe?
Thanks. I was just wondering, well, that there's a divergence, I think, between maybe the continent's view of fossil fuels and with the Trump administration, the drill, baby, drill viewpoint. And, you know, you're doing buybacks. We saw that here as well. A lot of our domestic producers maybe didn't want to make 5- and 10-year capital plans, and we're returning a lot of it to shareholders. That could change now, but it might not change for you. Do you think that this will spread, this sort of resurgence, or at least not the great trepidation about the future of fossil fuels? Do you think you're on the wrong side of that at this point?
I think fossil fuels will continue to play a critical role in the energy system for a long, long time, and particularly gas, even more so than other fossil fuels. And that is, of course, the area where we have a leading position and where we aim to be the world's leader in integrated gas and LNG. The advantage we have is that we have a portfolio that is global. It's very versatile. And therefore, depending on where geopolitics is, depending on where trade policies are, we can be very selective around where those capital dollars are going, whether that's into the US, whether that's going into places like Brazil, where we've just taken a final investment decision on a major facility there, whether that's into Oman or elsewhere. And we're able to be much more regionally inclined depending on what the countries in that region are essentially driving for. And I think that's the attractiveness of the Shell investment thesis. We have growth opportunities, we have world-leading franchise businesses, we have a lot of self-help opportunities, and we continue to enhance shareholder distributions. That's what we think is a winning formula for the future.
I guess my question, just to distill it into as quickly as I can, do you think that peak climate change hysteria and the rush to try to get net zero, which probably was never possible, I still hear it coming out of Europe. Oh, yeah, we're still going to try this. I don't hear it here anymore. Do you think we hit peak climate hysteria and are on the other side of that at this point globally or not?
Very difficult to judge. What we see at the moment, what we have been saying for some time, is that as part of the energy transition, you will need oil and gas for a long, long, long time to come. What we are seeing in Europe is a rebalancing towards a bit more of that narrative. So I think things have changed from where we were 3 years ago, and in particular, the Russian invasion of Ukraine has played into that psyche more and more. Companies like ours have to be able to look past the ups and downs and focus on the fundamentals. And what the fundamentals are telling us is that oil and gas and low carbon are all required in the coming years, and that's what we're looking to invest in rather than to go with the narrative at any single point in time.